Hey, this is David for Big Bits, and this is the Bitcoin Daily Update. We're going to discuss a little bit about the price action of the last day on Bitcoin, maybe discuss a few topics in the news, and call it a stream. These are pretty quick streams just to catch you up on what's going on in the day. So really, not much has changed over the last day, although there was one minor development here, and that was the 4-hour 50-period moving average, which was holding as resistance for quite some time, decided to break. Prices moved up. It's approaching the 200-day moving average again. You can see it's touched the 200 moving day average several times since falling below it, and it's acted as resistance every time before. It's going to be hard to say where things go. I have a feeling that things are going to remain pretty neutral for a little while. I don't think the daily averages have caught up enough to really indicate a huge potential move. Now, one of the things I was looking at was a potential double dip on the RSI to form some sort of divergence. You can see the RSI dipped quite low, and what I was kind of expecting was another dip down, but maybe not so far, and creating a divergence, but that would mean that the price would have to go even lower. But it looks like the 100-week is holding pretty well for now, so that's yet to be seen. Now you'll notice the indicator that I'm looking at down here. You may not recognize this if you haven't been watching my channel. I just published this the other day, and I've been making a few updates on it since, but this is my smooth RSI indicator. And really what you're looking at with the blue line is just the RSI, which, if you're familiar with that indicator, really a good way to measure when the prices are overbought or oversold. So I have those areas that could potentially be considered overbought or oversold labeled with a red fill and a green fill appropriately. So when in the red, it's probably a better time to sell than it is in the neutral area here, and when it's in the green, that's when prices are likely oversold, and probably generally a better time to buy. Now it's not financial advice. All right, now one of the things I did do was I smoothed out the line, and we're using a double exponential moving average, and with a 17 period on that double exponential moving average. Now what's happening is when the RSI first enters these areas, a lot of times the smooth line is not quite yet oversold, and what you'll see in these large sells or these large buys or these large successive candles with buying or successive candles of selling, you'll notice that the RSI continues to push down, or it'll take a break and then push down or up again. And so, for example, you can see it broke here, came down, up, back up again. And here it went down, came up a little, went back down again, come up a decent amount, it might come back down some more. Now, what we're actually looking at here on these columns, this is what I'm calling the histogram, which is a term I'm borrowing from the MACD, which is the difference between your actual line and the signal line on the MACD. But this is a smoothed RSI, which is essentially what this signal line is on the MACD. It's just the smooth MACD line. So what you're seeing here is the difference between the RSI and the smoothed RSI. And when it's a positive difference, if the current RSI is above the smoothed RSI, then you're going to have a green or a positive difference. If it's below, like it is here, you'll have a red column, which is a negative difference. Now you're probably wondering what are these little lines, and those are actually arrows that are trying to help us indicate when a change in direction has occurred. Now what does that mean? That means that look here, the smooth RSIs went up and now it's heading down. So we're trying to identify when that change in direction occurs on that moving average on that smooth line. And if it's changing its direction from up to down, it's a red arrow pointing down. And it seems to line up fairly well. I haven't back tested this on anything, but I thought the features were pretty handy on the indicator, so I went ahead and developed those. You can see here on the large increase in price earlier this year that it would have signaled to buy here at $8,150 and would have signaled to sell after the first red candle at 11,150. So that would have been a $3,000 win there if you had traded one single Bitcoin. So that's just something to look at on these features, give you kind of an idea of also what we're doing on this channel with the video series. But I definitely want to make sure everyone kind of understood what we're looking at here. And I hope this microphone isn't too loud. I don't really see anyone saying anything, so I want to assume it's okay. I know there's not very many people watching right now, but if you are watching and this is too loud or it's too quiet, please let me know. This is a brand new microphone. Okay, so back to the chart. Let me go back to the 4 hour, which is where we started. All right, so you can see that we have reclaimed the 50 period 4 hour as support. I'm really kind of neutral on where things are going to go. It's hard to say because we're wedged in between several supports and resistances right now. And I mean, honestly, if somebody tells you they know where this is going right now, they're lying or they're in control of the market. It's very hard to say, but you can see here on the 50 period moving average on the 4 hour that the forecasted moving average is actually flattening out quite a bit, which is a good thing if you want the price to go up, in my opinion. You don't want it to continue to go down. So even if price were to stay the same, our moving average would stay relatively where it is. It's not going to be drawn down by previous action, which has kept it lower. And you can kind of get an idea of how that's happening because we're no longer going to be counting some of these big red candles from the past. And the only candles that are going to be calculated going forward probably start from about here onward, which is why the averages can kind of stay flat here. Yeah, I mean, there's really not a whole lot going on with it because, I mean, look at the chart. I mean, everything's went sideways for like a day. There's really not a whole lot to say. One thing I did want to note, though, is if you're on TradingView and you're kind of following along with what we're doing, check the Heiken Asia candles. I'm probably really messing that up on the pronunciation, but I believe the RSI indicator works a lot better with these. It does in fact change the RSI value slightly, but you can see I think the signals are a little bit better when you're looking at that here. So what I've been looking for when I've been just looking at this indicator is I want a red arrow down and I want a red histogram, and not only that, I want it to be oversold. So this I think would have been a really good opportunity based on this indicator to sell at the end of that candle, and it was, you know, that was the very end of that large increase in price. And where did that increase in price start? Way back here. So using these types of candles, it kind of smooths out a lot of the noise in the candles and the up and down and the red and green candles over time, and you can get a good picture of what's actually going on with the trend in the price. Now, of course, this doesn't work all the time. And let me move this to where you can actually see it. I forget my head is hiding a lot of things sometimes, but you can also see that the trend changed here, but you'll notice it isn't super convincing. And a lot of time on these types of candles, what you're looking for on a strong trend is a very large red or green candle in the direction that you're looking for. And we did have that towards the downside here, but on the bounce, I guess you would call it, we really don't have much going on as far as the large candles. So the trend's really not picking up in this direction. It still very well could. They don't have to start off as huge candles, but as we've mentioned, we have the 200-day moving average there to look out for. You can also notice that, let's go back here before things really got impressive with the bull run earlier this year. You can see these started off really small with the Heiken Ashi candles, and then they got very large. So even though we are small now, there's a chance that they could turn up. But like I said, things for the most part are pretty neutral right now. So let me try to find some news. There was one thing I looked at earlier that was really interesting, and that was with Coinbase. There was also one more thing, and that was with legislative. Forget who it was. There was a legislator who's trying to introduce a bill to create a essentially a stable coin that's ran and managed by the U.S. government for the dollar to maintain its status of the primary currency of the world reserve and so forth. So let me find this in just a moment. Let's go ahead and pull up another chart so you can see something different while you're waiting here. Let's look at Ethereum versus USD. So let's see. Well, it looks like we're coming up against a little bit of resistance here on the USD chart. Let's look at it in Bitcoin. Okay, not looking too bad. Let's change it back to regular candles here, because we're kind of done with that example. Okay, yeah, I found several things that we're going to look at here. All right, so the first item here is this U.S. congressman asking the Fed to consider developing a national digital currency. And this is something a lot of people have kind of really expressed their feelings for in a very positive way in the crypto space. I don't think this is going to really have a negative impact. In fact, I think it would be a very good thing for crypto, because right now we're having to trust people like Tether, who are, I believe, owned or managed at least by Bitfinex, which a lot of people don't trust them and their relationship with Tether. There's all kinds of other stable coins, and I think that is part of the problem with the stable coins, is that they are managed by these private entities. And what people who aren't in crypto probably really want to see is they want to say, oh, the government, okay, this is the government's currency. This US coin, this is the dollar, but it's crypto. They're not going to understand that it's not going to increase in value at first. Probably they probably won't understand what a tether is unless the news does a really good job explaining it to them. But what it will do is create a much easier on-ramp for retail investments coming through on exchanges. And why is that? Well, it's because it's easier for these exchanges to work with crypto than it is with bank transfers. I mean, if you're following this channel, you know how easy it is to send and receive money with crypto, but you also have probably had to deal with exchanges and bank transfers and issues with that. So if we can get a national digital currency that maybe it's not on the Ethereum blockchain, obviously it's probably going to be its own blockchain, if it is one, or maybe it's even just a centralized system. But as long as there is some sort of central figure here and it's all digital and things can happen instantly or close to instantly, like with many different blockchain products, it really is going to ease the on-ramping for retail investors onto these exchanges. And if you're thinking about, eventually getting on these big brokerages, like let's say crypto comes to E-Trade or something like that, they're probably not going to be using Tether on E-Trade. They would want something like this, which is sponsored essentially by the government, to act as a reserve, which is what a lot of people seem to be afraid of with Bitcoin. It's not backed by anything. So I definitely think this is something good for them to look at. I do think it will be a very long time for this to happen, at least in crypto time. They could probably start to get the ball rolling. There's probably going to be research committees, if there isn't already. There's going to be a lot of work put into it before they do this. You got to think this is a monumental change. and it's the government. Those two things don't go together very well. So it's going to take a long time to get anything like this to actually happen. There have been other countries looking at a national digital currency or a national cryptocurrency tethered to their national currency with reserves held in a central bank somewhere, but they aren't the world reserve currency, so they can take a little bit more risk, even though they are taking their time. The U.S. dollar needs to be protected. I know it sounds weird coming from someone in crypto, but it does, because it holds up a lot of the economy throughout the world. So having a smooth transition from where it is now into a digital currency is a great start, and I think it would ease a lot of the concerns people have about Libra and other projects like that, because I mean, all Libra is essentially is it's just tokens. I mean, I don't really understand what the big deal is about any of the tethered coins. They're essentially just tokens worth $1. I mean, I don't see what the difference is if you were to go into Chuck E. Cheese and buy quarter tokens and then hand them to somebody else and they start using them as a currency for some reason. I mean, other businesses start accepting Chuck E. Cheese tokens. Who cares? I mean, personally. But definitely something very interesting to keep an eye on. Like I said, this is going to take a long time to get to any actual advance on it. But something kind of related to that is the Coinbase is going to start offering interest on the USDC stablecoin. Excuse me. Now, the USDC stablecoin is, or should I say, it was created, I think, by one of their partners or owners, something like that. I think it was Square, who I believe owns Coinbase. It's hard to keep up with all the companies involved with crypto and who owns who, but essentially there's a connection with Coinbase and USDC, and if you hold USDC on Coinbase, you're going to get paid 1.25% interest on what you're holding, and I think from what I read, it's going to be once a month. So this is probably your average percentage yield over the year. Divide that by 12 essentially, and you know, that's what you're going to get monthly. So if you had $10,000, 1%, you're getting what? Divide that by 12, you're getting like a few bucks. So it's not huge money, but if you're holding a ton of money, it's better than nothing. And if you're parking it on an exchange, riding at a bear market, it's probably better than nothing. And Coinbase probably needs a way to compete with other exchanges. This is probably what I think this is coming from, is that you have all of these other foreign exchanges like Binance, KuCoin, Huobi, that are all offering some sort of dividend or bonus for holding their tokens. But what was Coinbase offering you that could compete with that? Nothing. And this probably isn't enough to actually compete, but it is enough to draw some attention and probably keep some people from being tempted to go to those other foreign exchanges. I know if I had a ton of money and I was wanting it to be available to trade at any given time, I would want it to be earning as well. So if you had a ton of money sitting on Coinbase, I mean, in the past, what you would probably want to do is you would probably want to withdraw it, put it somewhere where it would earn money while you're waiting, then transfer it in, and then purchase what you need. So doing this kind of incentivizes people to keep their money on the exchange, and it also incentivizes people to actually use the exchange. So it's probably a very good thing for Coinbase that they're doing this. I'm interested to see what anyone else thinks, if they think this is actually a good idea or not. Alright, so we have one more thing here, and this was the article, "It's too soon to write off BACT," and I completely agree. I've covered this in the channel before, people are rushing to say that it's a failure and so forth, and I've already shown you that based on the volume with just one product, the US value traded with that one product on the very first day of its launch would have made it the 135th ranked crypto exchange in all of the world with one product, and what most people consider a failing launch as far as volume is concerned. It wasn't terrible, and it hasn't really improved much, but with these things, you're opening the door for these to be done in a regulated manner, in the way that if you do want the institutional investors to come in, this has to be there. So if you think Backed is a failure and you think Backed was stupid, we shouldn't have done Backed, then that's your opinion. But if you're actually one of those people who want institutional investors to come in and you want them to start buying up the Bitcoin, then you need something like this to be there. So you have to take the good with the bad, and these things can grow over time. A lot of people who are doing the institutional investing and the people who are on these platforms probably don't even know what Bitcoin is. Well, they've heard of Bitcoin and they think they know what Bitcoin is, but they probably don't. So you'll see a lot of inexperienced people probably taking their time to learn about it. Like I said, these people probably think they know what Bitcoin is, but at the same time, they're not going to rush into things. These people are smart. They've made a lot of money. That's why they're in the jobs that they have. They're going to take their time. They're going to learn about what's going on here. They have to learn this is an entirely new thing. And if they're going to have to learn Bitcoin, then after they learn Bitcoin, they're probably going to have to learn Ethereum. They're going to have to understand what a smart contract is. They're going to have to learn all about it, because some of these other products are probably going to end up coming there too. But I really appreciate everyone for watching. I'm going to take a break for a short bit on the live streams. I have some content ready to roll out over the next week or two, and that's going to keep things busy for the channel. I have to do some traveling, so those videos for the scripting tutorial are going to cover the content for the channel for the next week or two. And you can check out my profile on TradingView to get the source code for the scripts. The smooth RSI, this source code isn't available, but you can get the indicator and add it to your charts if you want. I personally think it's pretty interesting. I'm definitely not recommending you trade off of it. This is just something I kind of developed for fun, but if you want to take a look at it and play around with it for yourself, you're more than welcome to. It's on TradingView. Just check out my profile, BigBitsIO on TradingView. You can see all the stuff that I've done. Now, thank you once again, and I look forward to seeing you all again. Thank you.